in PSLV. It got absolutely crushed in terms of short interest in a matter of an hour. In 1 minute, you saw, literally thousands of shares.
You're watching Silver News Daily. Subscribe for more.
The silver market is under siege, but not in the way you've been told. Behind the calm prices and stable charts lies a brewing storm, one so explosive even seasoned insiders are whispering about triple-digit silver and a potential moonshot to $750 an ounce. Sounds insane? Maybe. But what if I told you China's largest insurers are now quietly loading physical silver through the Shanghai Gold Exchange? What if I told you the PSLV, a trusted vault-backed silver trust, was hit with a coordinated avalanche of naked shorts, millions of shares dumped in under a minute, to halt silver from surging? This isn't a market behaving naturally. This is a market straining to keep a lid on something
Doubled
massive.
since then,
Silver
since
isn't just
2017, and
it's being held down
arguably
like
still
a beach
rather
ball
undervalued.
underwater.
And this is
And
the
when
way
that
that
pressure
they
breaks,
manage
it
the
won't rise
price. Things
slowly.
like the ability
It'll
to short
explode. Stay with me,
massively
because
short
by the end of
PSLV to
this, you'll
keep the
understand
trust
why
from
some of the
going into the
smartest
open
money in the
market to
world
buy
is
more
betting on a
silver,
silver shock
which
that
pushes
most
the price
investors will never see
up.
coming.
I found it interesting, a tweet from Max Kaiser the other day, who is the Bitcoin maxi, has spoken out against gold for a long time. He was a gold bug for a long time, completely shifted, talking about stable coins. He says a stable coin, and this was just, he tweeted this on March 22nd, a stable coin backed by gold would outcompete a U.S. dollar-backed stable coin on world markets. Russia, China, Iran should take note. I would argue they are, and they have been. That's the whole concept of the unit settlement currency, which do not think for a moment that's gone. It would track inflation. The U.S. dollar does not. You're guaranteed to lose purchasing power in the U.S. dollar. The U.S. dollar has no volatility, but again, you're guaranteed to lose purchasing power. Bitcoin is deflationary but volatile. Gold tracks inflation and is minimally volatile. Why wouldn't Russia, China, Saudi, and Iran do this? Well, they are. I think they are issuing, they are dealing more in gold than they are in U.S. dollars. That's the whole concept of treasuries being dumped and gold being acquired. I found it interesting to come from Max Kaiser, this little tidbit. I saw another tweet that it was interesting because there are some people that I respect that I wouldn't think would say they agree with this, but they did. I'm gonna leave out the people who agreed with it. I just don't want to go there, but suffice it to say, it says, the tweet was, it seems the whole point of Bitcoin was to provide liquidity for U.S. treasuries and quell domestic demand for gold, while preparations were being made for a gold-backed U.S. treasury note, including, most importantly, repatriation of all U.S. leased and rehypothecated gold. Well, let's think about that for a moment. We're seeing the gold come in at levels no one has ever seen, and a lot of it probably was leased out gold and rehypothecated gold. We're seeing it come and flood the COMEX market to levels that no one has ever seen before. You and I have both interviewed Judy Shelton separately, and we know the whole premise of her thesis is to back treasuries with gold that would be redeemable. And certainly a lot of the demand that would have gone into gold in this environment has arguably gone into Bitcoin. While I'm not saying I agree with it entirely, it's a compelling thought process, to say the least. And when you talk about all of this talk of stable coins now, including Max Kaiser, it is the stablecoin market that is picking up the slack for the lack of central bank purchases, which net since 2014, there's not been one U.S. Treasury purchased by central banks since 2014, net. Yes, there's been a lot of buying by central banks, but more selling than buying since 2014. And the stablecoin market, which is now almost entirely backed by U.S. Treasuries, is providing a major source of demand for the Treasury. So lots of things happening under the sea, under the seams, and who knows how it all plays out. But when you see desperation, like, a million shares dumped onto the market and shorting PSLV at the open to keep them from
It always starts the same way. An eager investor, often nearing retirement, hears the pitch. It's slick, backed by celebrity endorsements, dripping with authority. The promise? Turn your IRA into a fortress with physical metals. But behind the curtain, a darker truth unfolds. These aren't eagles or maples. They're obscure, illiquid bullion products. Fractional coins, rare rounds, sold at jaw-dropping markups. We're talking $60 an ounce for silver when spot is under $30. It's legal robbery, and it's happening every day. Andy Schectman doesn't mince words. This is a predatory ecosystem, laser-focused on the unsuspecting and the inexperienced. These shady dealers aren't just fleecing individuals, they're sabotaging trust in the entire physical silver market. When retirees realize half their wealth vanished overnight in a fog of collectible premiums and empty promises, they don't rush back in. They retreat. And that's the game. Create disillusionment, suppress real demand, keep the market asleep. But here's the twist. This behavior, disgusting as it is, only strengthens the case for real silver. Not digital, not exotic, real, liquid, government-minted bullion. Because once you understand how manipulated this space is, the only logical move is to sidestep the traps and load up on the kind of silver they can't fake, dilute, or hide behind marketing gimmicks.
What Catherine says, I know who she's talking about. I'm not going to mention the name. There comes a time where you have to basically say if the person promoting it knows what they're doing. In some of the cases, I don't think they do. I can think of several influencers who I've said this to after they started with some of these companies, and they're blown away. My goodness, Andy, thank you. I've broken affiliation and blah blah blah. But there are others out there who are doing things similar, selling products that they shouldn't and misrepresenting and doing so knowingly. And that's different. And to Catherine's point, that's true. And I think you can avoid all of these problems by just maintaining one very simple ideology as it pertains to owning metals, and that's just keep it really simple. Buy American Eagles, buy Canadian Maple Leafs, buy the very boring vanilla main items at Bullion, not proof that. And if you're going to buy fractional, stick with the American Eagle or the Canadian Maple Leaf. Just make it simple. And if you do that, you'll never have a problem. See, the issue is that there's a handful of primary distributors. The primary distributors make a market in the items issued by the 6 primary mints and the subsequent refineries that make generic bars and rounds. They don't make market in any of these goofy things that, these companies are claiming they do. Now, if you want to keep it simple, first of all, stay away from numismatics until you've owned bullion coins and understand the whole concept of numismatics, or you get a once-in-a-decade type of deal that we had a month or two ago where you were able to buy certified numismatics, trade them straight up for 1-ounce gold bars. I've never seen that in 35 years. Fine, you don't need to be, well-versed in $20 gold pieces to get a deal like that, but you stick with gold and silver bullion from the 6 major mints: U.S., Canada, Austria, Australia, South Africa, United Kingdom, and buy the coins that they put out as their main bread and butter. The Britannia from the UK, the Krugerrand from South Africa, the Philharmonic from Austria, the Kangaroo from Australia, the Maple Leaf from Canada, and the Eagle and Buffalo from the United States. Remember, the Buffalo silver coin is not U.S. mint. It is private refinery. It doesn't mean you shouldn't own them. It's just not a legal tender coin. But if you stick with that grouping of stuff, you'll never get screwed, period. And it's easy to make sure you're getting a fair price. So anything deviating from that is where the fraud or the misrepresentation or the corruption in this industry, for lack of a better word, begins. It begins at a place where it's harder to find any type of comparable. It begins at a place where you're going beyond just getting bullion and you're focusing on what the rich people buy or the profit potential. That shouldn't come until you have a firm understanding of numismatics, of coins that have better profit potential and their liquidity. So don't start there. That could be something down the road.
Trust is the lifeblood of any market, and in silver, it's evaporating fast, especially when it comes to paper products. On the surface, ETFs like SLV and even vault-backed trusts like PSLV seem like a clean, efficient way to own silver. But peel back the layers, and what you'll find is a dangerous web of rehypothecation, opacity, and synthetic exposure. Andy Schectman has been ringing this bell for years. When you own silver on paper, you don't own anything. You own a promise a promise that depends on counterparties, institutions, and systems that have every incentive to avoid physical delivery. Just ask anyone who's tried to redeem a large quantity of PSLV. It's a maze of restrictions, red tape, and friction designed to funnel investors away from real metal and into layers of financial abstraction. And now, that illusion is breaking. In one breath, PSLV is touted as a secure, physical-backed trust. In the next, it's being aggressively shorted, slammed, with millions of shares dumped in a matter of seconds. Why? Because the last thing the system wants is for PSLV to buy more physical silver and tighten an already strained supply chain. The manipulation isn't subtle, it's desperate. And for anyone still holding on to the fantasy that paper silver is good enough, the writing is on the wall. The only real hedge in this game is physical silver in your possession or in trusted segregated storage. Everything else? It's just a shell game built on trust that no longer exists.
I mean, who knows as far as confiscation. I have a hard time believing that we'll see it again. You have J.P. Morgan as the primary custodian of SLV and GLD. It'd be much easier to take those two funds, the lion's share of gold and silver held in a couple of funds amongst the others that they are in custody of, along with BlackRock, without going door to door to take what amounts to a drop in the bucket in terms of what the American public owns. And you have the Shanghai Gold Exchange and the gold accumulation programs that the government is running for the people through the Shanghai Gold Exchange. They're promoting gold in China. You look to Russia; they've slashed or got rid of the duty, if you will, I guess it's called, or any extra tax that the people have to pay to own it in Russia. That's gone. They're promoting it to their citizens. You have countries around the globe, even those that we would consider to be a step or two behind the freedom we find here, which is probably silly to even say that, but these countries are promoting it. It would be the death knell for the dollar and everything we stand for if we took gold from our citizens. And we already are having a hard time inspiring trust for people to take our treasuries. If we activated eminent domain and took gold from the public, it would be, I think, a very bad day for the United States and our prospects of retaining the center of free trade globally. So I don't think that'll happen. It's too easy for them just to take the ETFs, but that's speaking to jurisdictional risk. You could dig a hole in your backyard and become a midnight gardener if you're really that concerned about keeping it in your house. I get it. If you want to move it into storage, we've partnered with Brinks and we've worked with them for going on 17 years. I've never seen an ounce out of place, raise my voice for a second, or question anything I've ever seen there. I've taken part in dozens and dozens of audits with the third-party auditor. They do things the right way, and we have facilities in Canada, in Toronto, Vancouver, Montreal, in the United States.
It happened in a flash. Millions of PSLV shares dumped in under a minute. The price slammed. Investor confidence rattled. But this wasn't random volatility. This was surgical, coordinated, and unmistakably desperate. The goal: halt PSLV from buying more physical silver. Why? Because every time PSLV acquires metal, it drains actual supply from a market already stretched thin. The shorts aren't just protecting profits. They're protecting the illusion. If silver were allowed to rise naturally, if PSLV kept accumulating at scale, the dam would break. And once that happens, the paper-to-physical mismatch becomes undeniable. What we're seeing isn't just market manipulation, it's system preservation. The powers that be are terrified of a physical silver squeeze, because the consequences reach far beyond PSLV. It would ripple through COMEX, LBMA, and the broader financial system, where unbacked contracts outnumber real ounces by staggering multiples. This is why they're shorting PSLV into the ground. Not because the trust is weak, but because it's real. Because it threatens the synthetic paper empire that props up the illusion of abundance. But here's the irony. This aggressive suppression is backfiring. It's waking people up, it's showing the cracks, and it's driving more investors than ever into physical silver, where there are no naked shorts, no exit gates, and no delays. Just metal. Real, tangible, disappearing fast.
A lot of the influencers like yourself that I've spoken to a lot of them have been approached by these companies. I've tried to educate them. I can say this because it was just said to me on a podcast with Mike Adams, and it's out there for people to watch. he was offered $100,000 a month to promote one of these companies. I would argue that most of the people promoting them are blinded by the salary or the check that they're given. Maybe they're even paid in gold and silver. They don't take the time to look and see just how damaging what they're doing is, because really what the motto or the operating procedure is, the standard operating procedure for these companies is when someone, the rare bird, pushes back and says, you absolutely wronged me, they don't drink their bathwater. They do it. They pay up to what it should be. They do it in a very reluctant manner. You have to know what to say to them, but they don't want to spoil their golden goose, if you will. And so they figure for every one or two people who bitch, there's in 98 or 99 who don't out of 100. And these are largely IRA clients, largely. And, either they don't take the time to realize it when they say, why is my statement so poorly reflecting what I paid? Oh, that's just the melt value. Don't you worry, when you sell, the price is much higher. And then at the same time, or they die and their heirs are left trying to pick up the pieces. It's a very diabolical deal that these guys have. What's really unusual, to your point, Dunnigan, is that they're all cut from the same cloth somewhere down the road, way up the road rather. It's like they all learned from the same source. Almost every one of them focus on quarter-ounce gold coins. I don't know why, but they do. Weird quarter-ounce gold coins that I have never heard of before, like Florin or just everything that you've never heard of.
Yeah, Grenada or whatever, yeah.
Yeah, and when you try and compare them with other companies, you won't find it. I've been doing this for 35 years. I've sent hundreds of millions of dollars to our storage program in Canada. I've worked directly with the Royal Canadian Mint for years. One of my best friends is one of the two Royal Canadian Mint distributors in Canada. I mean,
Owning silver isn't just about price anymore. It's about control. And that's exactly why storage has become one of the most hot-button topics in the entire market. For many, vault storage offers peace of mind. Secure, insured, fully segregated holdings managed by trusted names like Brinks. But there's a growing chorus of investors who aren't convinced that's enough. Why? One word: confiscation. The fear isn't unfounded. History is littered with examples of governments overreaching in times of crisis, seizing private assets under the banner of national interest. And in a world teetering on monetary reset, trust in official systems is wearing thin. That's why more and more stackers are turning to home storage, riskier in some ways, but for them, it's worth it. Because if you don't hold it, you don't own it. The deeper issue, though, is what this shift reveals. People aren't just buying silver, they're opting out of digital systems, out of paper promises, out of centralized control. This isn't just a metal anymore, it's a form of resistance. And when you add in the rise of geopolitical tensions and currency devaluation, the case for physical ownership only grows stronger, especially when you consider that paper products like SLV or unallocated vault programs aren't just vulnerable, they're weaponized. They dilute real demand, obfuscate true supply, and allow for massive leverage that keeps prices artificially low. So whether you store your silver in a Brinks vault or buried under your garden shed, one thing is clear. Owning physical silver in your name and outside the system isn't just a smart financial move. It's a necessary one.
Intimately close to the Royal Canadian Mint. I've been in their facility. I've watched gold and silver coins be made. I've watched it being melted down, the whole 9 yards. And one the other day I saw was a half-ounce gold Canadian buffalo. Didn't even know that existed. And these are sold at massive premiums. And when they come back to dealers like me, the response is, oh, I didn't even know these existed. Well, we don't sell these. No one's going to buy them. So you're not going to witness any premium selling them back to any mainstream dealer. These companies are literally destroying people's lives. And it typically is quarter-ounce gold coins or some oddball gold coin that you won't find on anyone's site with very large premiums to melt value. So, typically we see $900, $1,000, $1,100, $1,200 quarter ounce gold coins. Do the math. That puts it north of 4,000. It should never be remotely close to that. And we see silver coins 1 to 2 ounces, oftentimes fractional, 1, 1.5, 3/4, whatever. And they're on average $60 an ounce silver. It's, I talked about this at a conference in Ottawa the other day, and I never mention the names of these companies. There are a lot of reasons. I don't want to be sued. I don't want to go through it, trying to alert people the best I can just by telling them, look, this is probably what you bought if you got screwed by these people. And in every case, that's what they bought. It's really strange. But I must have had 50 people come up to me, half of them in tears, on their iPhone showing me their statements. This is exactly when you said that, I freaked out because that's what I bought. People fighting with one another, wives saying to their, I can't believe you did this. I told you, and it's really awful, man. It's truly, truly awful to see an 85-year-old man or to hear a man call you on the phone and cry that his wife is going to leave him because of this. But that's what I've seen nonstop over the last year since I started talking about this. So bottom line is, if you've been caught up in one of these deals where you've purchased quarter ounce gold coins or silver coins between 1 and 2 ounces for these exorbitant prices, or oftentimes you'll find proof coins at huge prices, reach out to us. We'll tell you what to say, how to deal with it, at least what kind of recourse you have with the authorities, and how you can be made whole. And then transition into vanilla gold and silver bullion that you can shop and compare with every major company in America. We've had great success in helping people do this, and I know you have too. So,
while the West debates premiums and paperwork, China is moving in silence, and with alarming speed. Their largest insurance firms, backed by staggering pools of capital, are now actively buying precious metals through the Shanghai Gold Exchange. But this isn't about gold trinkets or jewelry demand. This is institutional acquisition on a scale that reshapes the game. What's more, it's happening under the radar. These insurers aren't just hedging, they're positioning for a monetary shift, one where physical metals reemerge as the bedrock of value. And with silver still priced at laughable levels compared to gold, the strategic appeal is undeniable. Here's where it gets serious. This move isn't just about accumulation, it's about insulation. China sees the writing on the wall. The dollar's role as the global reserve is being challenged, and in that vacuum, nations are scrambling to secure hard assets. While Wall Street plays with leveraged ETFs and naked shorts, China is locking down physical supply, quietly, relentlessly, permanently, and it doesn't stop with insurers. Across Asia, from state banks to sovereign wealth funds, the demand for metal is accelerating. These aren't retail buyers, they're institutions with deep pockets and long timelines. They aren't speculating, they're preparing. Because when the next monetary reset hits, those holding real metal will set the rules. Those clinging to paper IOUs, they'll be left holding air. This shift is one of the most underreported stories in the financial world, but its implications are massive. Every ounce leaving Western vaults and flowing east isn't coming back. And when the squeeze tightens, it won't be PSLV or SLV that dictate the price. It'll be Shanghai.
In PSLV, that it got absolutely crushed in terms of short interest in a matter of an hour. In 1 minute, you saw, literally thousands of shares dumped onto the market, and just like that, maybe even more than 1 million shares. That drove down naked shorting PSLV. And the rumor behind it is that the reason they're doing that is to disincentivize not only investment in silver, but when there is a increase in demand in something like PSLV, they have to go out and actually purchase silver for the trust. And if you have all of this shorting of PSLV that is greater than the demand in PSLV, they don't have to go out and buy more silver. So they can short the share. And I was, looking at shorting. I found it interesting. And people should think about this in terms of the great taking, in terms of the difference between something like PSLV, which can be shorted, versus holding it yourself. This is SEC Rule 15C3-3. In the United States, the Securities and Exchange Commission regulates rehypothecation through Rule 15C3-3, which limits the amount of a client's securities that a broker-dealer can rehypothecate to 140% of the client's debit balance. So, they can take everything that you have plus another 40% and it can be shorted. So all of these shares that are then borrowed are shorted. They drive down the price. They have to, at some point, buy those shares back. But at this point right now, where there's so much demand in silver and they're still trying to keep the price down, this is a very dangerous time. And they're using PSLV as a tool to hold it down. I also found it interesting. I found a statement when we think of maybe the prospects of where silver could go from Donald Trump, and it stated 1/17/2017. Silver is the most undervalued asset on the planet. It's been money for all of human history, and it sits at $16.50 an ounce. Sad. So yeah, it's
While the West debates premiums and paperwork, China is moving in silence and with alarming speed. Their largest insurance firms, backed by staggering pools of capital, are now actively buying precious metals through the Shanghai Gold Exchange. But this isn't about gold trinkets or jewelry demand. This is institutional acquisition on a scale that reshapes the game. What's more, it's happening under the radar. These insurers aren't just hedging, they're positioning for a monetary shift, one where physical metals reemerge as the bedrock of value. And with silver still priced at laughable levels compared to gold, the strategic appeal is undeniable. Here's where it gets serious. This move isn't just about accumulation, it's about insulation. China sees the writing on the wall. The dollar's role as the global reserve is being challenged, and in that vacuum, nations are scrambling to secure hard assets. While Wall Street plays with leveraged ETFs and naked shorts, China is locking down physical supply, quietly, relentlessly, permanently, and it doesn't stop with insurers. Across Asia, from state banks to sovereign wealth funds, the demand for metal is accelerating. These aren't retail buyers, they're institutions with deep pockets and long timelines. They aren't speculating, they're preparing. Because when the next monetary reset hits, those holding real metal will set the rules. Those clinging to paper IOUs, they'll be left holding air. This shift is one of the most underreported stories in the financial world, but its implications are massive. Every ounce leaving Western vaults and flowing east isn't coming back. And when the squeeze tightens, it won't be PSLV or SLV that dictate the price. It'll be Shanghai.
Going into the open market, it's worth pondering. A couple other things, and then I'll take any questions if there are. We can say goodbye. I found it very interesting that 4 of the biggest property and casualty insurance companies in China have joined the Shanghai Gold Exchange as full members. Costs a few $100,000 to become a full member, but they are now. And if they take just 1 or 2% of their assets and put it into silver, the sky is the limit. There are things happening and they're beginning to accelerate. No question about it. And so I guess, look, maybe this is why we're seeing the smart money, whoever they are, shifting to precious metals. And institutional investors have increased their gold positions by over 40% in the last 3 years. So maybe that's why the metal has outperformed the S&P 500 over the last 24 months, really over the last decade. But suffice it to say, things are beginning to accelerate. And, I think the worst thing you can do is get too caught up in the market daily moves, down 15 one day, down up 15 the next. The numbers are bigger, but the percentages really aren't. And if you look at what I said earlier, that in the last 213 days, we've seen gold go from $2,500 to $3,000. That's the fastest $500 price jump in history. But in essence, you're only talking, under a 15% or about a 15% gain, just over 15, 16%. It was up 40% last year or thereabouts. So as the numbers get bigger, it kind of skews the percentage drop. And, so pay attention to that. Yeah, that number is big, but the percentage move wasn't the fastest move ever, but the amount of dollar increase is. Anyways, lots of crazy things happening. And I think it's literally just beginning. In an interview I did with David Hunter this morning, he thinks that we'll see a blow off here very soon, a blow off top in the equities, and then a collapse, a full-out collapse in the equity market, in everything, leading to a commodity super cycle where he's predicting, silver at 500 or 750 and gold at 20,000. Who knows where these
Look closely, and the signs are everywhere. Silver premiums, those extra costs above spot price that once soared during bull runs, are now at multi-year lows. 90% U.S. junk silver, once commanding sky-high premiums for its fractional utility and legal tender status, is now trading near historic bargains. Canadian maples, typically a retail favorite, are down to just $3.99 over spot. Even Krugerrands, the gold-silver hybrid of the bullion world, are priced at levels that seasoned buyers haven't seen in years. This isn't normal. It's a signal, a temporary calm before a buying storm. These suppressed premiums don't reflect a lack of demand. They reflect a coordinated suppression of price. And to those paying attention, it's a rare moment of opportunity. Because the fundamentals haven't changed. If anything, they've become more bullish. Supply is down, industrial demand is rising, monetary uncertainty is exploding, and yet somehow, physical silver is on sale. Smart money sees it. They're not waiting for CNBC to give them permission. They're swapping silver bars for constitutional coinage, not because they prefer coins, but because they want liquidity, utility, and anonymity. They're front-running the retail herd, stacking ounces while the window's still open. Every discount, every low-premium deal is a breadcrumb pointing toward a suppressed market that's running out of time. When silver finally moves, and it won't be gradual. It'll be violent. Because nothing about this market is natural, and the longer the spring is compressed, the more explosive the release.
in Texas, we're the only ones there at this point right now. Miami, we're the only ones there. New York City, Salt Lake City, and Los Angeles. I choose to work with a company of that integrity, a Fortune 100 style balance sheet, 100-year-old company who has never had an attempted break-in in any of their facilities. In a world of imperfect choices, it's as good as I find. I would stay away from private facilities in strip malls that these things that they use a retina scan or whatnot. These small places that I just think that it lacks the security, it lacks the infrastructure. Certainly, you'd want to make sure everything is insured and whatnot. For me, storage is about knowing the location, having the ability to retrieve it, making sure that the assets are completely segregated and fully insured. I don't think that anything fits the bill quite the way that our Brinks program does. Well, like I said, there are easy ways to hide this stuff in your home, bury it. If you get past that and still need to use storage, contact us. I truly do believe that our storage program is by far the best in the industry. And I do believe that. And I'm not just grandstanding, whether it be through the way that we have a fixed rate program that others don't have. We have a safe deposit box program in Toronto and Vancouver that others don't have, and access to Dallas and to Miami that others don't have. That's just the beginning. Reach out to us. Our Brinks program, I believe, is as good as it gets.
Everything we've just uncovered points to one inescapable truth. This isn't a normal market, and these aren't normal times. Predatory practices in the bullion space, naked shorting of PSLV, collapsing trust in paper silver, China's stealth accumulation, suppressed premiums, and now open predictions of a monetary reset all scream the same message. Silver is being held down because it's on the verge of erupting. This isn't speculation anymore. It's a rigged game that's starting to unravel. And when the unraveling accelerates, silver won't just break $30 or $50. The kind of move we're staring down could send it straight through triple digits. And yes, potentially toward that $750 target that once seemed outrageous. Because this isn't about price charts anymore. It's about trust, sovereignty, and survival. The smart money has already made its move. The question is, will you make yours? Subscribe now so you don't miss what's coming next. And remember, this is not financial advice. Always consult a licensed professional before making any investment decisions. FCCs.